Hello, everyone. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to another promising edition on the Forex Morning Mastery, our end of the week review as we prepare to join market participants as they round off their trading activities ahead of the weekend. I hope we are all prepared and ready to be part of this session. Very, very important trading session, which usually comes with its own level of volatility due to the rounding off of trading activity. We are likely going to be seeing some profit taking move, which could incite a reversal move against the prior leading price action. So you're welcome, and today we are going to be running through the financial instruments that we have been monitoring since the beginning of the week, which includes the USOILSPOT, which has in the last 3 days now we've seen some consolidation phase, which has further emphasized the level of indecision in that particular market. So we are going to be looking at how we will be navigating that dynamic today. And of course, we are also going to be looking at the GBPUSD, which was more of a bullish sentiment at the beginning of the week. We were able to run through that momentum, and not until about 48 to 60 hours we begin to see some bearish momentum. And in fact, we're still looking forward to see what is likely going to be happening on that one. Are we going to be buying today or getting ready to sell to join the sell-off to the downside? And of course, finally, my XAUUSD favorite asset amongst them. We're also going to be looking at how we will be navigating that dynamic today too as well. So in preparation for today's trading session, I do have a simple and insightful trading setup that we are going to be using to navigate the market. So I encourage us all to stay tuned in so that we do not miss out on these ideas. And for those of us who are joining for the first time, you're highly welcome on board, and I'm very, very excited to have you around with me this morning. I do know that you will be wondering what this is all about. What is it that we're doing here on the Forex Morning Mastery? Well, the Forex Morning Mastery is an idea that was born out of the necessity to do follow-up details on the assets I shared during the weekend. So during the weekends, I usually share my ideas on each of these assets we are going to be looking at. And during the Forex Morning Mastery, we come here to review how well they are doing, and of course do follow-up details on how we will be positioning ourselves for the next move. And it's also important for me to also state that this is not a signal service platform, but an avenue where we all come together to have a deep understanding into how market participants are behaving, and of course using that information to strategically position ourselves for the next move. And depending on what kind of trader you are, be it scalper, day trader, swing trading, position trading, you can use the information you gather here to tailor your approach to your point of entry depending on what type of trader you are. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which eventually will help you in improving your trading strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. You can ask me any question whatsoever. I am open to them, be it on the asset we are looking at. And of course, if you have anything as regards to the financial market, drop them. I'm here and willing to be of help in that regard. And so with that being said, here we will be moving into the business. And before I go on, I can see a couple of comments here. Hello Mansour, good morning to you. Glad to have you. So you said no sound. Are you really, is that true? Is there no sound? I can hear myself here. Please let me know. Please kindly confirm to me if that is still the case so that I can do the necessary adjustment right away. Please let me know in the comment section. I would love to see your feedbacks as regards to that. Can you still hear me loud and clear? Can you see my screen? Please let me know in the comment section. Nicholas K, good morning to you. Nicholas, trust you're doing very well. Glad to have you around with us this morning. Okay, I'll look forward to seeing your feedback, please, in the comment section. And please let me know if the sound is okay. All right, Sheriff, my namesake, good morning to you. Oh, great. Thank you very much, Sheriff. Loud and clear, thank you. So we are good to go. Mansur, please, probably you're having, you need to reset your, maybe you need to restart your app. Please do that right away so that you can hear what we are saying. And please do not forget to hashtag Forex Morning Mastery in the comment section, or add it to your comments in the comment section so that we can help the algorithm to push those videos to a wider audience of traders. Okay, Mansur, all right, I'm glad everything is fine, so we can move ahead to our plans for today. So as always, we are going to be diving right into the business, and as usual, the first thing we normally do in this community is for us to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that valuable information we need, and most importantly, timing to strategically position ourselves for the next move. And based on the asset we are looking at today, or for this week that we've been monitoring for this week, we have been focusing on economic features from both the United States and the United Kingdom. And we usually focus on high impactful event, but on days when there are no high impactful event, we include some mid-tier economic features so that we can have a broader view into what market participants are looking at. Now, so far this week, we've had some interesting and useful economic features that are one way or the other influence the behavioral patterns of market participants. At the beginning of the week, we had a not too impressive state manufacturing index from the United States. Then we had a couple of speeches, and one of the major highlights of the week was the Fed chairman's speech on Monday, which of course was so important that majority were looking forward to it. And the reason why it was important at that time was due to the uncertainty surrounding the Federal Reserve interest rate decision for the later part of this year. And of course, proud to that event, the data coming out from the United States weren't that impressive, which obviously gave the market a signal that inflation is gradually easing in the United States, clamoring for a potential interest rate cut. And the Fed chairman went on to acknowledge this on Monday and suggested the idea that the inflation figures is gradually moving towards the target of 2%, and as a result of this, that we will be looking at the possibility of any cut anytime soon. And as a result of this, the sentiment in the market had increased in favor of an interest rate cut. In fact, immediately after that session, if you look at the CME Fed Watch 2, the sentiment increased to 100% of market participants thinking that interest rate will be cut as early as the month of September. Though on Wednesday things changed a little bit, we have it at 94.6, which is still in favor of the interest rate cut. Now, we all know how this influences the market dynamics surrounding the US dollar, has the potential for an interest rate cut usually reduce the demand for this asset, as market participants will tend to drop this asset for other safe haven assets. And this led into the decline in the US dollar for the first half of the week before we saw that increase. Then later on Tuesday, we saw the retail sales data, which is also considered to be a key economic indicator that gives us an insight into the value in total receipts of retail and food stores in the United States. And of course, this data here also gives us an indication of consumer spending in the United States, which is considered to be a major driver of the US economy. And as we saw here, the data came in just as market had expected at 0%. That is, it was unchanged in the last 30 days. And if we compare to the previous month data, that is for the month of May, it's a little bit lower than that. So it shows that there is no improvement in that sector, which went on to further emphasize the easing inflation in the United States. Then on Wednesday, we witnessed the consumer price index from the United Kingdom. The consumer price index is considered to be an inflationary gauge. We all know that, for those of you who have been with me for a while, and it gives us an insight into the inflationary pressure in the United States. And a data higher than market expectations usually provide insights into the health of the economy and consumer confidence, hereby influencing the expectation about future economic growth. Now, the data came in below market expectation. We had a 0.1% as it was as same as market expectation, but below the previous month CPI data. That was one. Then we also saw the producer price index from the United Kingdom coming in lower than market expectation. The retail sales data came in just as expected, and of course we saw some positive data on Wednesday. That is the building permit from the United States. The building permit, the housing start, and this building permit and housing start gives us an insight into the housing sector of the United States, another sensitive sector. So if the housing sector is doing very well, it shows that there is increased consumer spending, and that majority are servicing their mortgage very well, and even getting loans to purchase what's it called, to buy houses. So there's spending there, which is more or less a positive signal for the United States. And we saw some beautiful traction in favor of the US dollar during the course of the week. We are going to be looking at that in a moment. Then on Thursday, we saw some labor-oriented data from the United Kingdom. We saw the average hourly earnings coming in just as market had expected. We saw the claimant count change, showing that there has been some level of unemployment in the labor sector in the United Kingdom. And of course, we saw the ILO unemployment rate coming in just as market expected. So it was more of a mixed data from the United Kingdom as well. And then this also influenced the negative influence. We saw sorry about that. I never knew the sound was still playing behind the scenes. I'm very, very, very sorry. And in fact, thank you for that feedback there, Udueno. I really appreciate that. Thank you very much. So I stopped it already. So please let me know if everything is quite fine from your end. I really appreciate that. Okay, so I do hope you are hearing what I was saying. I'm proud of this one. So we talked about the mixed data that came in from the United Kingdom yesterday, and it shows that there is unemployment still sufficing in that economy, which obviously influence a negative sentiment against the United Kingdom's British pound. So then we also saw some other speeches. Thank you very much, Udueno. Okay, so good. So it has been quite a bunch of meatier economic features for yesterday, and finally today, Friday, July 19th, we had the retail sales data from the United Kingdom this morning, which came in lower than the market expectations. So for those of you who do not know what the retail sales data is, you see it gives us an insight into I talked about this earlier, into the total receipt of retail stores, representing consumer spending as well. and its impact on market sentiment is very significant as it provides insight into the health of the economy and consumer confidence. That is the consumer confidence in the UK economy, hereby influencing expectations about future economic growth. Now, if we look at the data here, it came in below market expectation, and in fact, it came in way below the previous month data, which was at 2.9%. So with a deficit of 1.2%, it showed that the retail sales sector contracted in the last 30 days, which is not an impressive data from the United Kingdom. And this has further influenced negatively the bearish, the momentum against the United Kingdom. We are going to be looking at that in a moment. Then finally, in about 5 hours from now, we will be looking at the Fed's official speeches. We have William is going to be speaking in about 5 hours from now, and then much more later in the day we will be listening to Bostic, who is also a voting member of the FOMC committee. Now, whatever they say in the speeches will give us an insight into the economic outlook and potential projection for interest rate decision for the later part of the year. And considering the fact that we are in an era where inflation is gradually easing in the United States, which has incited the idea across the market that Federal Reserve will be cutting the interest rate, it is one event we definitely want to look out for to have an insight into what is going to be happening in that regard. So with this being said, we will be diving right into the chart. Let's look at things from a technical standpoint, and the purpose here is for us to see how market participants are digested the information from the economic event through the course of the week, and how they will be anticipating the remainder parts of the remaining events that are coming in this week. And this usually reflects on the chart as technical and technical patterns and structures on the chart, which will be giving us an insight into how we will be strategically positioning ourselves for the next move. So with that being said, here we will be moving right into the first instrument on our watch list, which is the USOILSPOT. Now on the USOILSPOT, okay, this is my new setup for today, but let's quickly run through what really happened at the beginning of the week. So usually this takes some time before it loads up. I don't know why. My USOILSPOT chart usually does this. So it usually takes about 30 seconds to about a minute before it loads up. But while it loads up, let's run through the fundamental factors behind the scenes that has been influencing the sentiment in the USOILSPOT market. Now, for those who have followed me, I talked about at the beginning of the week, I did talk about this, the weakness in the US dollar, which resulted in us buying the USOILSPOT at the beginning of the week. And in the last 3 days, we've seen how the market had declined. And this could be connected to the recent strength in the US dollar, putting pressure on oil prices, as a stronger US dollar makes oil more expensive for buyers using other currencies. Now, I've talked about this countless of times in this community, how the US dollar and the USOILSPOT are inversely proportional in value. Now, if the US dollar is expensive, it becomes difficult to buy because other currency will need to convert their local currency to the US dollar before they can buy the USOILSPOT commodity. And as a result, if the US dollar is expensive, definitely they will reduce the demand. But if the US dollar is cheap, then a lot of demand is expected in the market. Then there is also a mixed demand signal concerning the slowdown in the Chinese economy. China being the world's largest oil importer, and whatever affects that economy will definitely influence the sentiment in the market. And at the beginning of the week, I talked about the contraction in the sector, the industrial sector, which though it expanded in the last 30 days, but the data was not as impressive as the previous month, which incited some selling ideas in the market. Majority dropped the crude oil commodity due to this data we saw. Then the potential interest rate cut too as well is another key factor here. As the Federal Reserve is considering rate cuts, it is unclear how this will impact oil demand in the near term, as a rate cut could either boost or hinder economic activity. So, but from a theoretical standpoint, if the Federal Reserve cut interest rate, definitely this will influence the US oil spot commodity positively. So our chart has loaded up right now. So let's quickly run through what really happened from a technical standpoint. I saw a comment now from Nicholas K, says that I can hear you over the music. But I got a couple of comments that the music is now down because I switched it off about 5 minutes ago. Probably you are watching the stream from your end is lagging, so I will suggest you move the video to the recent video. So if you are watching the past video, definitely you will be listening to the music. So try to refresh that page on your YouTube app. So looking at the structure here on the 1 hour time frame, so at the beginning of the week it was more of a bearish momentum, as we saw here. Remember, we were able to identify a range bound structure after monitoring the character of price action during the I think the first 12 to 15 hours of the week. It was more of price action consolidating and confined within the $82.55 level and the $81.58 area, giving us an indecisive phase at that point. And of course, whenever we have this kind of structure, we do exercise patience, waiting for either price breaking out of the resistant line to give us an opportunity to buy, which obviously never happened, hereby negating any bullish idea at the beginning of the week, or the breakdown of the support line, which actually resulted in a how many pips move? That was about 130 pips move to the downside before the bullish pressure resumed. And if you remember vividly, during my commentary on Wednesday, we talked about the potentials that buyers could take over the market after taking into consideration this descending trend line we identified after connecting the series of lower highs for the first 2 days of this week. And you know how we use our descending trend lines. Of course, if price remains below the descending trend line, we want to be looking out for selling opportunities, and we will not be considering buying unless price action breaks out of the descending trend line. And as at Wednesday morning, we saw the breakouts of that trend line with an engulfing bullish candle. And I did mention on Wednesday that we will be looking out for price coming back to retest structure in an attempt to continue the uptrend scenario. And as a result, we had the buy position triggered at the $81 area. And remember, we had multiple levels to maximize the potential of this bullish move. So we added one more at the $81.58 area. And of course, we also added another one at the $82.50 level. So the third one closed at break even, while the first two positions did very well, and we were able to scoop in a minimum of 200 pips on that one before the bearish momentum came in during the later part of the New York session on Wednesday. And since then have not been able to take any trade on the US oil spot due to these all choppy market conditions, as buyers are still struggling to gain some traction at this point in time. And for those of us who are part of this profitable journey, well done and kudos to you. Now, another thing that happened on Wednesday and Thursday was the API and EIA report, which I don't have the right figures right now. But one thing we need to understand is that the report showed that there was a significant decline in crude oil stockpile in the United States last week. Now, what this means is that the supply in the market is not enough to service the demand in the market. And whenever this kind of situation happens, they usually bank on the stockpile to feed the demand in the market, resulting in the drawdown and the stockpile. Now, for me, this is a signal that we could be seeing increased demand in the nearest future, maybe today and through and because of next week trading session. So I want to consider the potential that buyers could come into play in this market. Now, to navigate this dynamic for today, we have a new trading setup to guide our decision. So after looking at the character of price action since the beginning of this week, I was able to identify the setup you are seeing on the chart right now. And as it is right now, we have price so far this week, though you can see price has been range bound between the $82 area and the $79.25 level. But one thing you would notice here, despite the fact that price is in a range bound structure, you will notice that buyers are stronger at this point. Now, if we look at what happened last week Friday following this decline here, and then the first day of this week, we saw that as soon as price tested the $79.25 level, they found it difficult to continue the bearish momentum. And as a result of this, we saw buy pressure resume. And for me, I noticed the reversal pattern around this area. And whenever we have this kind of reversal pattern, the next thing we want to be doing is to mark out a neckline, which will be guiding or validating that reversal pattern if price action ever breaks out of that structure. And of course, we saw price break out of that structure. Thank goodness we were part of that move, and we see price coming back into that area to retest it. And I did this morning say that if we see a reversal setup around this area that is above the neckline, then we want to be continuing the uptrend move. Now let's zoom in to see what has been going on since the this price comes into the neckline. Now, if we look at what is going on here during the Asian session this morning, you will see a potential reversal pattern somewhere around here. And if we mark out the neckline of that reversal pattern, we should be having something like this. So let me mark this one out here. So we are looking at $80.80 level. So let me just do this right here. So we want to mark it out. You want to be doing the same thing as well, as it's going to be playing a role in guiding our decision today. So we have the $80.80 level. So there's a typographical error here. So we have the $80.80 level serving as the neckline of this new reversal setup we are seeing right here, just right above the neckline of that double bottom structure I showed you earlier. So will price action, we have a breakout already with an engulfing bullish candle. Will price come back to retest the structure to continue the uptrend move? That is one opportunity I'm looking out for. But at this point, it makes a lot of sense. We have a buy stop order above the $81 area right now, and then have our stop losses right below the neckline, dovetailing to about 35 to 45 pips thereabout. Remember, we do want to be giving enough breathing space for price action to move around, considering today's rounding up of trading activity ahead of the weekend. Now, if this momentum continues, we're looking at adding more buy positions at the breakout of the $82 area, which interestingly shares a confluence with that descending trend line that captured the character of price action since the beginning of this month. So if price breaks out of the $82 area, then definitely this will be a beautiful confirmation that buyers will get stronger as that trend line will be breached and broken out of. So at this juncture, and based on how the market is behaving right now, I have a strong feeling that price will continue to the upside. And in fact, if we consider the API and EIA reports, it further supports this bullish idea. So the path of least resistance for US oil spot is still looking very bullish. Now, in as much as we are looking out for buying opportunities at this juncture, we cannot ignore the potentials that sellers can still come into this market. And if that is going to be happening, what are the areas and levels that will feel comfortable for us to join a decline? Well, if you would ask me, the support line here, that is the lowest point price action has gotten to for this week, that is the $79.25 level, is looking promising to join a sell. So by the time price breaks down the support line here, it would have taken out this demand zone, which has been negating sellers' attempts since the beginning of this week. So that area there looks promising to join a decline. However, in as much as it looks promising to sell, I'm beginning to see the possibilities that could make us sell even before that breakdown happened. Now, if we consider the lowest point here, and then the next low here, you can see we have a higher low. And whenever we have this kind of higher lows on the market, what we want to be doing is to connect it, as we will be having an ascending trend line to guide our decisions going forward. So I want to thicken this one a little bit to emphasize its importance. So we have an ascending trend line which will be guiding our decisions today. And you know how we use our trend lines. As long as price remains above them, we feel comfortable in our buy position. So what I'm trying to say here now is that we could see the privilege of joining a bearish move even before the breakout of the $79.25 level happens. Now, to do this, I want to see price break down the trend line. We are not selling right away. We will wait for confirmations to happen, like a retest of structure where continued selling pressure below the trend line on our lower time frame could give us a good confirmation to join the decline. Hence, we will sell below the $80.25 area, and of course have a sell stop order below the $79.25 level. Now, while we sell below the $80.25 level, that is if this happens, please note that we need to move our stop losses accordingly, secure the position while price approaches this temporary demand zone I identified between the $79.25 and the $79.60 area. So it's very, very important. So this is my simple view on this asset for today. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us updates as at when due. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next financial asset on our watch list. You can as well use that time to mark out these levels accordingly on your chart. All right. So I can see a comment here from ITK Investment. Okay, so ITK means Investment Trust Knowledge. How are you doing, ITK? Trust you are doing very well. So ITK is asking here that how do we join the Telegram channel? Is it free or do we need to pay as well? Kindly give us details. I think it's all right. Okay. The Telegram channel is free. It's open to everyone, and we usually drop updates on that platform and give us an idea of what is going on in the market from time to time and during the course of the trading session every day. And you will find the link to the Telegram channel right in the description box below. Just click on the link and it will take you right into the channel. Then click on the join option and you will be right in the channel. And if you want to search for the channel's ID, you can see it's scrolling at the bottom of your screen right now. Those lime green letters you're seeing scrolling at the bottom of your screen is you will find the ID to the channel there. So I think it's trading with Master Sheriff right there. So click on the link if you prefer that option, or you want to search for it. Just look for the username there. I think I answered your question there, ITK. So in the absence of no further questions, I'm of the opinion that we are all on the same page now. So we shall be moving right into the next asset on our watch list. So I encourage you to stay tuned in. So the next asset we are looking at this morning is the GBPUSD, that is the British pounds against the US dollar. And in fact, it's so unfortunate that we were not able to, I personally was not able to join that bearish momentum that we've been witnessing here since Wednesday's trading session. And I did consider the bearish momentum as a short-term trading opportunity, and I did mention during my live session that for those who are scalpers, who are scalping the market, you could take advantage of that opportunity for short-term trading opportunities. But for someone like me who is looking at swing trading, looking out for longer term moves, I was of the opinion that that bearish momentum could be a retracement phase of that impulsive move we capitalized on at the beginning of the week. Remember, we were part of this strong bullish move to the upside, and that price may come back, retest structure in an attempt to continue the uptrend move. But this time around, the calculation was missed. As you will see here, price continue to drop to the downside. And for those of you who actually took advantage of this opportunity, you must have accumulated some significant amount of profit on this one, a minimum of 70 pips. That is, if you're only taking one position. Congratulations to you anyway. For me, I missed out on that opportunity, and I'm still waiting to see what is going on in the market. Well, before we go into the technical details, it's important that we also understand why the market is behaving this way, especially in the last 24 to 36 hours. Now, one of the factors influencing the GBP/USD decline is the weak UK retail sales data we saw, as the June data showed a steeper decline than the market had expected, suggesting consumers are struggling with higher interest rates at this point in time. Now, as a result of this, the immediate reaction was negative, and we saw the market sell off the pound sterling, as we saw the price of the British pound tested a new high around the 1.30450 level that was at the on Tuesday's trading session, and we saw a lot of profit-taking activity happened as a result of this. Then another factor that is influencing the sentiment in this market is the uncertainty surrounding the Bank of England's interest rate cut decision. While inflation is cooling in the United Kingdom, remember they finally hit their 2% target last month. The Bank of England is still hesitant about cutting interest rate due to the stubborn US inflation. Due to the stubborn inflation in the service sector. I talked about this on Wednesday, which was at a 5.7%, which is not making things easy for the Bank of England to cut interest rate at this point in time. So it's still very high, and as a result of this, they are caught in a dilemma of what to do next. And I think this uncertainty surrounding this market has further escalated the decline in the pound sterling. Then another factor here is the recent US dollar rebound, which of course has taken a toll on the pound sterling. We saw the US dollar increase in value in the last couple of days, which for me, I still think it is a retracement of the strong bearish momentum that started last week, and that the US dollar is still going to decline, considering the majority of market participants leaning towards the Fed interest rate cut as early as the month of September. Of course, we are going to be looking forward to Fed official speeches today, which will also be giving us an insight into what is likely going to be happening. So whatever they say today will be helping us navigate this current market dynamic. So like I said earlier, we talked about this earlier, and I showed you on the economic calendar. So we are looking at two speeches today. We have the Fed Williams speech coming up in about 2, 3, 4 hours from now. We also have Bostic's speech coming up much more later in the day. So we want to hear what they will say, and this will give us an insight into the economic outlook and potential future interest rate decisions. So with that said, I have a new trading setup to guide our decisions today. So I will share that with you in a moment. So this is what I am looking at as we prepare for the last trading day of the week. Now, if you look at the structure here, hold on a second. So, okay, let me talk about what really happened prior to this. So we had a flag pattern on Tuesday. Monday, Tuesday, we've had this flag pattern formation. Remember, we had this flag pattern formation where we saw that impulsive move to the upside, and then price went into a descending range bound structure, giving us an uptrend continuation pattern. And of course, we did join that uptrend move at the breakout of the 1.29750. We had two buy positions. We rode the momentum up all the way into the 1.30450 area, giving us a minimum of about 100 pips considering the second buy position. And we were looking at the this area that price may come back and retest the structure to continue the uptrend. We were looking out for that reversal pattern, which obviously never happened. So at this point, we have a new trading setup to guide our decisions today. So this is what I am looking at right now, and I just got information now that I wasn't able to. We didn't drop the commentary this morning on GBPUSD. I already planned it out, but I don't know what happened. But this is what I was looking at this morning. I had a demand zone between the 1.293 and the 1.295 right here. And of course, if you look at the structure here, price action has been above an ascending trend line for about how many weeks now? Hold on a second. So since the last week of the month of June, price had consistently found higher lows and higher highs. And if you connect a series of higher lows, we have a couple of ascending trend line to buttress the strength of the buyers at this point. And as long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying. And if price breaks down the ascending trend line, then we want to start considering selling. Now, looking at the structure now, you can see what has happened in the last couple of hours now. Price had already broken down the ascending trend line right here. And of course, it has broken down this temporary demand zone I identified at this point. Now, from a technical standpoint, this is a good signal that sellers are getting stronger around this area. But one thing for sure is that we cannot ignore this second ascending trend line right here, which could be a bust up for sellers and potentially become a platform that will incite the uptrend continuation, right? So at this point in time, we are at a crucial juncture where though I personally have a sell position triggered at this point, which is currently running with about 22 pips, and of course I'd moved my stop losses securing some of this position. But for those of us who missed out on this one, well, let's see if the market will come back, retest the structure. If it does, continue selling pressure could incite a further decline to the downside. However, if we consider the fact that price action is getting close to this ascending trend line, that is one, and then secondly, price is coming back to retest this trend line here. So you can see we are at a crucial juncture at this point in time. So what I will be looking out for, considering the fact that price still remains above the second ascending trend line, we could see a reversal pattern evolve around this area. So if we see anything like let's see, considering this impulsive leg, if we see anything like a double bottom structure or a head and shoulder pattern, we will be marking out the neckline of that pattern and then buy the breakout retest of that structure. This could take a while. It could take about 2, 3, 4 hours before this matures. So we still need to exercise patience at this point in time. And for those of us who joined this bearish move, please move your stop losses, secure your positions, as we are at a crucial juncture in this market right now. So let's see how the market will play out from this area. It's just important we exercise patience here, and let's see how the market will play out. Of course, I will be with you in the comment section of both my TradingView and Telegram platforms to give us update as at when due. So this is my simple view on the GBPUSD. Let's exercise patience and let's see how the market will play out around this area. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list today. And remember to mark out these levels on your chart. They are very, very important, as they will be serving as a yardstick guiding our trading ideas today. Okay, so in the absence of no questions, let's move right into the next asset. We're already running out of time. The go-go challenge is supposed to be starting anytime from now, but we are behind schedule on that one. So I'll quickly round off on the next asset we are looking at the moment. Okay, I just saw a comment now from Odueno who says that, okay, what's it saying here? Okay, it says, any updates on how to join the go-go challenge? I have everything possible but not working. Oh my goodness. Okay, so I think I had a couple of this complaints during the last couple of days on about joining joining the go challenge? Well, it is quite simple. I think the issue is the confusion is as regards to where the go challenge menu is on that particular page. So once you click on the link to the go challenge, which you will find in the description box of this current video you are watching, once you click on that link, it will take you to the YouTube membership perk page. Now once you get there, there are two options on that page. Now the first one you see on the page, which is at the top, is the patron pledge, which is it's a token which you use to support the channel and also have the privilege of enjoying some first-hand videos and priorities, which you will see on that perk. And then scroll down, you will see the go challenge perk. So you scroll down, the first one you see is a patron pledge, and then you will scroll down, then you see the go challenge perk. So once you see that, you click on it, and then it will guide you accordingly. So I think the confusion is where the go challenge is. So on that same page, right at the bottom, you will see it. Okay. Well, okay, that's all right. I will check your mail. I will check your mail and see why that is. It might be due to your location. Maybe you can't do transaction on Google from your location. I don't know yet, but I will look at it and see how that what is happening there. And have you also explored the option of contacting the Google customer service? I don't know if you have explored that option, but I will definitely check your mail and give you an appropriate response on that one. All right, thank you very much for that feedback, Odueno. All right, so with that being said, let's move right into the final asset on our watch list for today. Stay tuned in. So the final asset on my watch list for this week is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And I did an update. I did a couple of updates in the last 2 days for the premium members on the go challenge before I went to bed. On Wednesday night, we were able to scoop in some 150 pips move for some short-term buying opportunities. And yesterday I also did an update giving a scalping idea, but it didn't turn out the way we thought, though we never had that position triggered at all as price continued to nosedive, pushing price further to the downside. And due to this, we missed out. Just like what happened on the GBPUSD, I missed out on the bearish buyers on this particular asset in the last couple of days due to my strong inclination towards that bullish uptrend continuation due to the sentiment in the market at this point. So as it is right now, gold prices continues to undergo a further correction from the recent record high we witnessed on Tuesday, I think. This is largely due to the resurgence in buying power for the US dollar that we witnessed in the last 24-36 hours. Now, the question for me at this point in time, based on what I'm seeing on the chart, is how far will this bearish momentum go? Now, before we go into that detail, let's quickly look at the what we saw at the beginning of the week and how we did capitalize on the ascent of the gold price. Now, at the beginning of the week, we saw a range bound structure here. We saw price confined within the 2,415. and the $2,404.50 level, as you will see here. And this gave us a range bound structure to work with and making things easier for us to capitalize on. And for those of you who have been with me for a while, you know how we attend to our range bound structure. When we see them, we know that there is an uncertainty in the market at that point as buyers and sellers struggle to make a headway. So the negotiation will have to continue, and then if we finally see a directional decision, then we want to be joining the move. And we usually look out for either price breaking down the support line for selling opportunities or the breakout of the resistance line for buying opportunities. And if you remember vividly, considering the strong sentiment in the market that supports the idea that Federal Reserve will initiate interest rate cuts in September, with expectations for 2 additional cuts by year end, I had a strong feeling that price will go to the upside. So as a result of that, I was saying here that we will not be selling unless we see a significant confirmation, like a breakdown retest of structure before we join the decline. Though we saw price break down the structure here, but it turned out to be a false breakdown. And of course, with our buy stop order above the 2,415, we were able to capitalize on this uptrend move. And in fact, due to this, we were able to run this momentum all the way into where the TP target was at the 2,470. And if you're taking only one single position, you must have been in profit of about 550 pips. And of course, remember, we had multiple levels to capitalize and maximize the potential of the bullish move. We had a 2,425. We also had a 2,434. All in the attempt of maximizing this move. So on the XAUUSD for the first half of the week, we were doing pretty well on this particular asset. Now fast forward to the second half, where we saw selling pressure resumed. We have a new trading setup to guide our decisions going forward. So to share this, let me share what I'm looking at right now. So this is what I am looking at the moment. So I have a simple trading setup to guide our decision going forward. Now, another thing we need to also consider that is going on right now could be some profit-taking activity, which has resulted in that bearish momentum that we saw here. And like I said earlier, how far will this bearish momentum go before the second leg of the bullish momentum will happen? Now, with that idea in mind, I took into consideration the character of price action since the last week of the month of June, and this is what I was able to come up with. We have a trend line which emphasizes the strength of the buyers in the market after connecting the series of higher lows. So we have a beautiful ascending trend line ahead of today's trading session. And you know how we treat our ascending trend lines, of course. We will continue to maintain a bullish bias as long as price action remains above the ascending trend line, and we will only consider selling if the ascending trend line is breached. Now, if we zoom into the current structure, you will see that I have a temporary demand zone between the 2,390 and the 2,400. Now, as at the first week of this month, this zone we identified was a strong selling niche before we finally saw price break out of the structure last week Thursday. And since the breakout happened last week Thursday, price action had remained above the structure, and every attempt by sellers to break through was met with strong resistance from the buyers, making this area a formidable and robust demand zone to work with. And of course, it is quite close to that ascending trend line. Now, in addition to that one is this couple of levels here. We have the 2,420, and then we have the neckline of that reversal pattern that incited this bearish momentum. I missed out on that one as the market never came back to retest the structure. I was actually looking out for a retest of structure to be part of that bearish move, which never happened. So we missed out on that one. So we have no other choice than to exercise patience and see how far will this momentum go. Now, as it is right now, price in the last 3 to 4 hours has been oscillating around the 2,420, a level which was broken on Monday at the beginning of this week, remember. So this was where price action started this week, around the 2,420, and right now price is back into that zone. Now, my concern now is, will this platform be inside the second leg of the bullish momentum, considering the fact that it has a memory for buying power? It was our buying niche at the beginning of the week, and right now price is back into that structure. Will the memory be strong enough to push price again to the upside? And one interesting thing about this area is how beautifully it's close to that ascending trend line. So what we will be doing at this point is quite simple. We will exercise patience and wait for a reversal setup to emerge. We are looking at, let me say for the sake of this session, we're looking out for maybe a reversal setup like a double bottom structure, head and shoulder, inverse head and shoulder pattern, or a falling wedge where the breakout of the neckline will be all we need to continue the uptrend move. So that is what I'm looking out for to continue the uptrend move. And for those of us who are going to be in the go challenge, we are going to be looking out for the setup around this area to see how we capitalize on the next move. So we will need a lot of patience around this area to navigate this current market dynamic. However, if price action breaks down the structure, the trend line, we will be considering selling, but we are not jumping in right away, as we will need some confirmation like a retest of structure, and then we join the decline. And if we join the decline, we need to be very, very careful. As you know, we have a demand zone around this area. So as soon as price comes close to the structure, we move all stop losses, secure the sell position while we wait and see if the market will break down that structure to add more sell positions to our existing trade. So we are at a crucial juncture, an area which requires a high level of patience, and we will be doing this together. And of course, if there are any significant updates, I will be dropping them on both my TradingView and Telegram platform, as I usually do. So let's see how the market will play out here. I have a strong feeling that we will see a reversal setup in the next 2 or 3 hours. And if we do have them, I will give us updates on the entry point and how we will intend to maximize the profit, looking out for more levels to add additional buy positions. And one thing I would also like to state here before we end the analysis on the XAUUSD is the neckline we have here at the 2,452. Now, if we buy maybe after the formation of a reversal pattern, as soon as price gets into the neckline, we want to be moving our stop losses accordingly to secure the profit, as we may see price do a retest of that structure, which I told you I was looking out for to inside the sell-off. And if we look at the distance between where price is right now and that level, that's about over 350 pips move. So we want to look out for buying opportunities around this area and have our TP target around the 2,450 and the 2,452, 350, 360 pips profit thereabout. And if price action breaks out of the neckline, then we could be looking at adding more buy positions to the existing trade. So let's see how the market will play out around here. Patience is required, and I will scale down to the 15 minutes time frame, which is what we are going to be looking at mostly during the go challenge. So this is what structure we have here. So we want to see a reversal pattern really before we jump into any positions. Trust me, I will be giving us updates as at when due. If you have any questions whatsoever, feel free to let me know in the comment section. As always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we round off on today's Forex Morning Mastery. And you can use that time as well to mark out these levels on your charts. They are very, very important in guiding our independent trading decisions for today. So see you around, see you in about 15 seconds from now. All right, I'm sorry about that. Thank you very much, Odueno, for your feedback. Thank you very much. So, like I was saying earlier, I saw your comment, Sheriff Abdul Kadiri, my namesake. You said you're also facing the same challenge, and I said I will be taking this up with YouTube myself to know why this is reoccurring amongst us here. So I will give us updates as soon as I get some positive feedback on my Telegram platform and of course on my YouTube community hub. So thank you for the feedbacks. I really appreciate it. I will get back to you as soon as possible. And I will also advise that if you have the privilege of contacting Google or YouTube customer service, please do lodge the complaint and let's see how this is playing out. But I'll do that on my own end here and give us feedbacks immediately I get something positive. So in the absence of no further questions, I think we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. We usually see a low turnout on Fridays. I don't know why that is, but Fridays for me is one of the volatile days which usually give us the privilege of scoping some significant amount of profit. So let's see. It's okay, but we were able to attend to all of the three assets on our watch list today, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD. And we were able to identify simple trading setups as always to navigate the current market dynamic today. And I do hope we all marked out these levels and structures accordingly on our chart. And if you have done that, well done and kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. And always remember, while you position yourself for the next move, it's important you have a well-defined risk management strategy in place, as every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So let's ensure we have this in place. It's very, very important so that we can live to trade another day. And for those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here. And if you have done so, I look forward to seeing more of you. Same time on Monday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to start to replicate the success we had this week during next week's trading session. So on this note, I would want to wish us all the best of luck. Then I also want to ask if there are any constructive feedback that will help improve this community. I'll really appreciate them. You can send me an email. I have my email right in the description box below. If you have any ideas that could improve the quality of the services I render here on this platform, please let me know in the via my email. So you can check my email right in the description box below, and I will really appreciate it. So it's on this note I wish us all the best of luck. trade smart, trade consciously, and do have a wonderful evening, everyone, and a beautiful weekend too as well. But bye.